The government is planning, or at least there are hints that the government is planning to use gold to buy Bitcoin. Does that mean you're late in the game to buy either one of those? Let's find out today, and welcome back to another live episode at Nova Rice Invest. So just to give you a bit of background for those who are brand new to either real estate or to investing in general, gold has been making headlines, and recently they passed the $4,000 mark in terms of cost per 1 ounce of gold. Now people are lining up in stores to get their hands on gold, but the truth is that gold has always been around, and it used to be seen as boring, right? Because hey, there's no trend around it, and why should I pay attention to it? Well, it turns out that it's making the headlines because when we started the year, gold hasn't even passed the $3,000 mark, and now it's at 4,000, which is its highest historical price ever. And so a lot of government officials have been toying with the idea that maybe they could use gold to basically create money out of thin air once again and use the proceeds from that to invest in Bitcoin, so that way they can modernize their reserves. So I thought it was an interesting point of view that I wanted to bring up to you to consider and eventually discuss if you're actually too late in the game, or can you still get in gold or Bitcoin for those who are interested. So what I want to do now is to take you straight to the article where this piece of information was shared for all of us to get through. So it comes from Money Metal, but this is not directly from Money Metals, but this is something that it already appeared on the Federal Reserve's notes. With public debt at high levels, some governments have begun to explore financial additional expenditures without raising taxes, while also not increasingly public debt outstanding. I mean, we're right now at the peak, or at least the sentiment is that the consumers at the peak of inflation, and with tariffs and everything that's going on, the last thing you want is to raise taxes on the citizens, right? So one of the theories that were considered is to use what they call a valuation gain on gold reserves. So what does that mean? Well, this article right here from Money Metals, they happen to be a gold dealer for those who are interested. And so for those who have no idea what the metals are standing, well, these are the prices: 4,139.65 for gold today at the moment of this episode recording, while silver is at 48.87. So it came down a little from its 50 top price from a couple of years ago. So gold revaluation and the strategic Bitcoin reserve. So what does that mean for you? Let me just make sure you can actually see the text that's in here. Let me zoom in and make sure you can actually see this, and I'm just going to move myself over here so you can read the text. Alrighty, so there are hints that at least a few within the federal government are toying with the idea of revaluing the U.S. gold reserves. What does it mean exactly with the whole revaluation? Well, currently there are 261.5 million ounces of gold reportedly owned by the U.S. Treasury, and they have been held in the books at just 42.22 ounces, the cost. So that means 1 ounce of gold is being recorded on the books at 42.22, but we all know that that's not the price today. And last time this price was adjusted was in 1973. So if we kept the prices as is, meaning using the 42.22, that's the cost per ounce, and you multiply that by the amount of gold that we have available, that would put $11 billion on the U.S. balance sheet. However, if you were to revalue the value of that gold to today's standards, now you can actually bring up 700 billion by assigning the current value to the reserve. So that's a way to instantly create money out of thin air. And so the proposal says that upon revaluation, the Treasury Department will go to the Federal Reserve Bank and request a credit against the Fed's gold certificates for the difference between the old value and the new value in dollars. And so another plan currently in front of the Congress is called the Bitcoin Act to 2025. And by current, just keep in mind that this article was published in August 11th. So some parts of it is a little bit outdated, but the foundation still stands, right? It calls for gold revaluation windfall to be used to buy Bitcoin and create a strategic Bitcoin reserve. And that will be a dangerous way to use the fund. At least it's who this the author of this article believes. Why is it considered risky, right? And feel free to leave it in the comments what your opinion is. But according to what we're seeing here, it should be understood that revaluation is likely to be highly inflationary. The Fed could create up to $750 billion with a few strokes on a keyboard, meaning just by updating the value of gold, you're just creating new money. And by using that new money, now you could potentially back that using gold. And so remember that the more money is being printed, the higher the inflation the economy will be creating in this case. So dumping that large Z into the crypto market will drive Bitcoin higher. Then price inflation will ripple out into the broader markets and economy as some holders cash in on Bitcoin gains and buy other assets, goods, and services. Of course, the more money you have, and for those who have a sense of financial literacy, you know that holding cash in your bank account or in your house means nothing, because the more money is being printed, the less valuable your money becomes, because it's just worthless. There's a lot of it floating in the market. So that means you have to do something with the money, and you have to spend it fast. And you shouldn't spend it on things that depreciate in value. You should buy assets with it. And so people will eventually turn into real estate or buy more gold, or in this case, buy more Bitcoin, right? And so what this article is saying is that the more money is circling around and the more people buy, call it asset or non-assets, prices are going to go up no matter what. And only the one that's willing to pay more is the one that's going to win that bet, right? So that's what it's saying here. So let me see. In any event, is what we see. The Treasury has no business speculating in crypto or any other market. There's zero assurance that Bitcoin will succeed and gain widespread adoption and use as anything other than a speculative asset. We don't know that. I mean, I used to think that Bitcoin was a scam 15 years ago. I remember sitting in a classroom where one of my classmates just bought Bitcoin at $600. And when he shared that, I was like, why? That's a scam. But then there were other classmates that were actually interested and they wanted to gain more. Back in the days, I wasn't too much into it. I kind of got an idea what Bitcoin was, but I didn't believe in what it was. And I thought that it was just going to disappear. And fast forward 15 years and look at where we are today. The adoption is massive. And it's not just in the States, but it's worldwide. I mean, we're talking about countries betting their economy in Bitcoin. El Salvador is one of them. So I wouldn't say necessarily that, hey, the widespread adoption is not going to happen. If anything, I think we're heading down that path. What we don't know is what's going to happen to the value once the government legalizes Bitcoin, if it ever gets to that point. Like, will the value still hold or will that crash? We don't know that yet, right? So, so what this author is trying to do is it's making a case for gold and not necessarily Bitcoin, but it's always good to consider both sides of the equation so you know what you're dealing with, right? Take different opinions into account, and then use those opinions to help you make an informed decision, right? So according to what this author is saying is that Bitcoin it's technology, right? So, and therefore is prone to replacement by something users like better. And the technology sector is littered with companies that succeeded for a time, gained huge value, and then ultimately were replaced. Yahoo, BlackBerry, and MySpace are actually good examples of that. Bitcoin's value might go higher, but it can also go to zero. That's true. Gold is tangible. That's the main difference here. You can actually touch it. You know what it is. You will know where you put it, unless you forgot where you store it. But the essence is gold is tangible, just like real estate is tangible. It's something that you can touch, right? And it's tangible in nature. It's a reserve asset held by central banks indirectly to back their currencies. And holders of the currency could redeem their dollars, pounds for gold for treasury reserves. And so what the Bitcoin app provides for strategic Bitcoin reserve, it's just simply a clever marketing, at least is what the author is saying. The bill does not contemplate making dollars redeemable for Bitcoin. Citizens will know the purpose of the federal ownership of all crypto. And so there's no mention in the bill about the strategy behind the strategic reserve. Based on the name, perhaps what they want is for people to daydream about Bitcoin going to millions of dollars each, at which point officials would put into some beneficial use related to sound money or eliminating debt. So it's an interesting point of view. And so let's see what else is reserve to remain. Okay, so the U.S. already has the largest gold reserves in the world, and those reserves will work perfectly if they want to switch them from fiat currency back to gold, back to dollars, and pay off some debt. So that's a good move. That's what he's saying, that, you know, if you're going to reevaluate your gold to today's standards or today's pricing, then maybe some of those proceeds should be used to eliminate the national debt and not necessarily to modernize your investment by putting that money onto Bitcoin. So if Congress wants to reevaluate gold and print out roughly 750 billion for use in building reserves, the fund should be used to buy more golds. Noted that gold isn't a risky and it's a well-established reserve asset, and should leave Bitcoins to the speculators. So again, I don't necessarily agree with his point of view. I do agree with the fact that maybe some of that money could be used to get rid of debt, but I don't necessarily believe that Bitcoin is going to disappear. It hasn't gone away in the last 20 years. Since I started paying attention to that, so I don't believe it's gonna go away soon. The fact that we have one country in the world that's already betting its economy in Bitcoin, and it seems to be doing pretty well, and on its way out to what it used to be, that only shows that potentially Bitcoin could do much more than just simply be a speculative asset or in a speculative investment. Every time I watch the news or like I listen to a podcast, I see more and more big names heavily invested in Bitcoin. I personally don't invest in Bitcoin because I don't like the volatility nature of it. I like something that's more stable and boring. I'm okay with potentially earning less, but I don't want to find myself in a situation in where if I see a deal that I want to put my hands on and I want to liquidate some Bitcoin, that by the time I go to liquidate, the value has fallen like 50%, because that means I will not be able to get my hands on that deal. And that's the reason why I don't touch Bitcoin, and I respect it, and I am aware of its existence, and I monitor it. I find it to be interesting to study, but it's not something where I have the guts to get my hands on, because I just simply, I manage other assets better. I see a couple of people connected. I don't know if you want to share your experience when it comes to investing in Bitcoin or gold. Let me know what you think. While you think of your questions and you share your point of view with me, I want to share one anecdote. So I have a person ask me the other day, do you think it's still a good time to get into gold, or either to buy or just to sell whatever asset you have that's held in gold form? And so my answer is, with any investment, you should not try to time the right time to get in or the right time to get out. You should just simply look at your wallet, and if you have that access to get your hands on that asset, you should just do it without hesitation and thinking about it. A clear example is what happened to us earlier this year. We invested in, for us, by far the largest acquisition we've ever made, a $2 million deal. At least for us, it's big. I know that maybe for some people it's not so much, but we decided to invest in this piece of real estate using a different way. Normally the way we have grown with real estate is that we did a lot of cash out refi. We bought, we held for a couple of years, we improved the property, and then we just sell it, right? And then not sell it, we just do a cash out refi, and where I will just pull the equity out and continue to keep that property because my tenant is helping me pay down that debt, right? And then with the proceeds of that cash out refi, we'll buy more properties. But this time around, decided not to do that. We wanted to test something out that's more creative, and that way we have something new to bring to the table and share with everybody who tunes into our channel. And so instead, what we decided to do was to leverage our retirement plan, our IRA, and liquidate some gold. So we bought gold back in 2019, and it was sitting at $1,900 at the time, which I thought was ridiculously expensive because when I first started monitoring gold, it was worth $500 an ounce. So that goes to say how familiar I am with the assets. And so, but when we bought it, we didn't buy gold with the intention of making money off of it, or like as an investment like we will do with real estate. The intention behind buying gold was more as an insurance. Hey, well, we know that the pandemic is here and the government continues to print money, which only means that the dollar will devalue and be worth less. Things are going to get more expensive. So I just want to make sure that I am using my money to buy something that in the future, should I need to liquidate that, I will still hold my purchasing power, meaning that my money will still be enough for me to buy another asset. And that's what we did. We didn't buy it with the intention to, hey, let's make a gain out of it. But it turns out that fast forward a couple of years, 2025 comes and we see this amazing project that we couldn't let go. And so we decided to liquidate our gold at $3,000. Yes, we made a profit of a little over $1,000 per ounce of gold. And at the time we celebrated, it was great because we had the liquidity to put the down payment, and we were able to close on this deal. Fast forward to October this year, now we see that gold, it's passing the $4,000 mark. So what can I do? Should I look back and lament the fact that I didn't hold the gold until October to liquidate and make more than $2,000 in profit? No, because that means the property that we bought at the beginning of this year will not wait 10 months for us just so we can liquidate the gold on time. So when it comes to investing, instead of thinking, oh, I'm going to wait for the perfect time to go in so I could buy cheaper, or wait for the perfect time to sell because I'm going to make more money off of it, try to think about what you have to gain out of that move. Like if you're going to go into some type of asset, call it the stock market or something, what's your end goal and what you're trying to achieve at the end of it? And if you're going to sell an asset, what are you trying to purchase with it, right? Like, are you trying to purchase another asset that's going to generate even more money than just holding the gold? If that's the case, it doesn't really matter how much of a gain you got out of it. What's important is that that money was available, readily available for you to put it to use in that purchase of that next piece of investment, and in my case, a real estate investment that you wanted to buy. And that's how you should be looking into things. I see that people are still connected, but I don't see any questions. So I'm just going to give you your time back. I've spoken enough for 17 minutes. So typically I try to keep the conversations short and sweet so that everybody can watch it without getting sick and tired of my voice. Thank you so much for tuning in. If for whatever reason you have additional questions that do come up later on, feel free to just leave them in the comment section below and I'll do my best to answer them. In the meantime, thank you for tuning in. Lots of love. And I see you in the next video. Take care. Bye-bye.